So this is the first video, I guess. This is more of a journal for me to keep myself accountable and just be able to keep track of things properly. And it's in a video, it's nice and easy. So we'll first go over my strategy for this setup. So we're in New York Stock Exchange, which is open 2:30 p.m. UK time, and then I've got to determine my daily bias, make sure it's a clean daily bias, mark out draws on liquidity and key levels. So I've marked out things like previous daily low, which we've already swept on NQ, but on ES we have not. So we've got an SMT already there, but it was pre-market, so I'll take a closer look at that. And then I've also done the price opening gap from Friday, it was. So on the daily we can see there's a big price gap. Now I did the 9, I'm not on a futures chart, I'm on a CFD chart, so it's a bit more difficult. I can't just change to non-electronic trading hours. So yeah, I marked it out and I've done it, but there it is. So there's that as well. That would be cool to get filled. And then this is a daily gap, which I've marked out here. I should probably write in fair value gap there. Let's change that to white. Is that done? Did I do the right thing? Doesn't look like it. So yeah, so that's what we're looking at. I'm definitely bullish for the day. I mean, we're at all-time highs still. Keep climbing. We have been for the last couple of weeks. Well, yeah, for the last week. We've been climbing, took them out. So definitely bullish. 4 hour is bullish. We took the lows but failed to break structure. And then we didn't even take out the lows, like I said, SMT here, so, and we do have some lows there, so I will mark these out now, because these now can be pre-market lows. So they're now pre-market lows. Let's change that to white. So when I'm marking out my key levels that I'm basically going to be take profit points, I have done London highs in a purple line and Asia highs in a yellow, so I'm just not marking it out as a white line, so I know which ones these are when they hit. So I know that we might get more of a reaction from it afterwards, or we could just burst straight through. We could also reverse from it. So that's exactly what I'm doing. We can also do pre-market highs here too. Or pre-market lows, sorry. Wait, I didn't do pre-market highs on the other one, did I? No, okay. So I'm going to go ahead and delete this previous day low, because we took it out on Nasdaq, but we didn't on the S&P, so it's still there. But yeah, we just gotta wait. I want to see these lows taken out. Ideally this gap gets filled, and then the next thing is we've got to wait for the session to open, which we're in now, and then wait for our key levels and draws and liquidity to get hit. And then afterwards what we'll be looking for is we'll be looking for a 1 minute breaker structure, and then for a 1 minute continuation. So that can be a fair value gap, an inverse fair value gap, where we want to tap into it and then we want to react from it positively. So if I just find a quick example, so the same way this 15-minute gap here, so we tapped into it with the wick, and then ideally when I say a positive reaction would be for this candle to be closing bearish, for it to then be like, I mean, you could even count this bearish candle here, because we came in, we were still respecting it, and then we closed. Did we close below it? Nope. Again, I'm trying to struggle to find a good example, but I think we get the idea. Okay, here we go. Big fair value gap here. And then we had a positive reaction there, so like essentially that would be the entry point there, like that. So that's what we're looking for on the 1 minute. So we'll be looking for a 1 minute breaker structure, then a continuation, so a fair value gap, order block, inverse fair value gap, breaker block with a positive reaction, and that'll be our entry point. And ideally we see an SMT, so something where we sweep lows on one and then not the other, and then we'd take the leading index, the one that is showing, in this case, more buying power. But yeah, that's it. Probably not going to be much talking in these videos other than the introduction and then when we're locked in, because it's just waiting. And this is really good for me, just as a journal. I don't expect any kind of like views or anything really. This is just my own journal, so yeah, gotta wait. Yeah, we might not get anything today at all, which is totally okay. I mean, considering we already got the SMT and we're already getting a positive reaction off of it, I mean, considering the S&P was the leading index on this, we could actually scale down and look for an entry. So here we go. Here's a perfect one. So inverse fair value gap. We got a 1 minute breaker structure. We got a 1 minute breaker structure here on this candle closure. After that lower high there. So what do we do? There was no continuation. This technically could have been a continuation, but it probably would have been maybe not too high, but the risk reward wouldn't have been great. I generally want to aim for my last take profit around a 1 to 2 to 1 to 3 at least. So I mean, here you go, here's a positive reaction then. So we can always mark that out. Below the lows. And then if we go to the highs here, okay, 1 to 2.8, so this would be totally valid to take. But with me, I really like this inverse setup. So inverse, we come and tap it, and then what I would do is I would just wait for another breaker structure back up. And then, yeah, that could be an entry. I mean, this could have been a trade, but again, that would have been at 1:45, so 45 minutes before market open. And that's not really ideal. So yeah, it just wouldn't have been a trade anyway. But it's always nice to see and just prove that this it works, you know, that the setup works. And then you could have your first take profit here at the pre-market highs from there, so something like that. But then also we have London highs and then Asia highs, and that would be a 1 to 4.7, which is cool. Oh, the other thing I forgot to check is if we have news today. Okay, so Powell's speaking. I don't know if anything happened because we didn't get any big. Let's go ahead and I can delete this. I was just using this as an example. But if we go ahead and mark it up, I mean, even on this 30-minute candle, not much has happened really, considering Powell speaking, which is weird. I don't know if there was. Yeah, I have no idea, bro. If I see Powell speaking, I just think it's going to go crazy. But we also have JOLTS job openings and manufacturing PMI. So we definitely wait until after the news comes out to take a trade, because we trade on the 1 minute as well. All it takes is, like, let's say we were in this trade like this. Let's say we took this trade and it was valid within our setup, and it happened at, instead of it, we were in it at like 10 to 5 2, news coming out. Oh, where's my drawing tool gone? Here we go. You could literally like start seeing this positive reaction, and then news comes out, just wakes you out, and then comes back up. And that has happened in the past. So yeah, we don't want to be doing that. So let me. There we go. But yeah, so just gotta wait now. I'm probably gonna go make a coffee. So yeah, it's kind of boring, really. But what I'll do is I'll see if I can mute this mic as well, and then it's nice and easy, so there's no like. Wait, that should work. So I'll just mute it, and then I'll just unmute it when I come back, because nothing's happening really right now, and I need to wait for news anyway, so there's not much to do. So I'll be back. Okay, so I'm back. Let's see what's happened, if anything has happened. Okay, S&P's climbing quite high. Looks like we might get an S&T here. And now, given that we already took out previous day low on Nasdaq, so we're already seeing selling pressure. If the S&P takes out these highs, more than London highs, more than likely we're going to get an SMT here on the S&P. And if we look at some of these would have been a target for longs, one of the first targets. Now, obviously longs were valid here. They just happened prematurely. Because look, we took out the lows. Like I said, if we, whatever that trade I did, either or, even if you went with that one, they look like 1 to 6, 7 RR, or if we did the one with the inverse value gap and then breaker structure back up, there you go, 1.286. So if we're hovering at TP there, it's easily 1 to 2, 5 RR, yeah. So like I said, just happened prematurely, but what I would like to see now, given that this has happened, we've seen selling pressure on NQ and then not on ES. So what we'll see now is if we see a take of these London highs, we've already seen these kind of, this build up of highs here, this accumulation zone, we've seen a sweep of that, and across even this high here, which will be like a 15-30 minute high. Obviously in NQ they're all still here, look, there you go, more highs. So yeah, what you would see now is with that selling pressure, we've got the SMT, so SP500.EQ took out took those highs, NQ did not. So I would be bearish on NQ here, and then I would now be waiting for a 1 minute breaker structure continuation model to then take out pre-market lows, price opening gap, and come and fill in this daily fair value gap. Now, am I going to take this? No, because it's against bias. Look, the 4 hour refused to break structure. If the 4 hour did break structure, then yeah, we could have definitely looked at shorts, but we didn't. So NQ would have been perfect for this as well if it did break structure. The 1 hour is bearish, but like I said, that's just a 4 hour and daily. We still could take longs here now, whether it fits within our session zone, because I'm only going to trade until 4 p.m. UK time, which is 10 a.m. No, not 10 a.m. 11 a.m. Eastern. So 90 minutes is my window to trade. Well, not even 90 minutes, because I'll wait for macro. So like literally 70 minutes, an hour and 10 minutes to trade. So that's about it. Like, make sure, yeah, my mic is on. We'll just have to see what price does, because we could still see news could easily bomb down. We could see an SMT on, these might turn into relative equal highs for London highs and the highs that we've made so far. News in 3 minutes could easily see us take out all of these lows. Look, because we're climbing down now, so, and because we've not got that on Nasdaq, we could easily take out the lows on Nasdaq, but stay strong on and show buying power on ES. So then I would then be looking to buy, and we still could see that. So we'll just have to wait and see. But there's no rush. If it doesn't happen today, it might happen tomorrow, and if it doesn't, there's still plenty of days to trade, so I'm not necessarily worried about that. But yeah, just gotta kind of chill out for a bit. See what happens with news in 2 minutes. Now, I guess I can talk about other things instead of just like going on my phone. Um, I say that as I'm going right on my phone. But I think this is going to really help me understand myself and my flow and just how I trade and be a lot more, I don't know the word, like aware and situational about my trading, because I feel like I was just jumping on the charts and then I would take a trade, I'd forget about it. Do you know, like if you're on a diet and you kind of just binge eat, and then you're not aware of it, like you'll eat a snack, but you'll eat 10 snacks during the day and you forget about them. You'll think, yeah, I had 3 meals. I had my breakfast, my lunch, and my dinner. But then you forget about the 10 things you ate in between. It's kind of like that with trading. I'll remember the big losses, the big wins. I mean, I don't lose that much, but I meant like the big losing streaks, and then. But it's the things in between where you just take trades and you just like that add up, that make an impact that you don't realize. So this whole journal is to stop that, and I think this will be a great way for me to deal with the emotional aspects of trading if I become a bit more mechanical with it. And I don't think I need to be flexible. I don't think I need to go, oh well, we didn't get this, but I can adapt and do this. So like, there's no point. So I only really need to do that when I'm profitable, which I'm not. So, oh wow, that's a big gap on the 5 minute. Yeah, what an opening gap, bro. Look at that. That's insane. For only little news as well. Like I don't know. I've never really considered this extremely high impact. I would have considered Powell speaking worse, but hey, hopefully some good reactions off this. We'll just have to wait. I'm just gonna mute my mic now. Just let price do its thing, and then just come back when something's happening. So we're seeing some pullback now, which is great, but it's nothing I'm going to trade right now. I mean, we took out London highs, like I said. You might have saw I did a little like live test, but like it was something like on this inverse fair value gap. Retested it, waiting until a more stronger push out of it. I mean, this was a bearish close, so that would have worked, but I mean, on these setups anyway, with an inverse fair value gap, you can like put the stop just above, which would it have got stopped out? Maybe, probably, but even then, nothing came of it. So yeah, I might do a live test there as well. But we never took out the London highs. That's exactly what I was waiting for. If we were going to if we were going to live test a short fully and have that within a playable actual trade. But here we've took out some lows here. That looks like we've got an SMT. So just some market opening lows. Which, as you can see, big SMT here. So really, you could look for longs off this, but not for me, bro. It's I'd need to see at least pre-market lows taken, but because we're so close to this price opening gap, I would like to just see that get filled anyway, because look, we've got relative equal highs at some London highs, not the London high, but just at other highs I've marked out. But yeah, it's not worth it. As you can see, look at the 5-minute chart here. It just looks choppy. It's just accumulating. Even on the 15-minute, look, it's just a bit choppy, really. I mean, the S&P's had a lot cleaner movement there, but yeah, Nasdaq's just, it's undecisive on where it wants to go. It doesn't want to take out these highs, but then it doesn't want to take out these lows. So I'm probably not going to trade today. But another thing I did do was, ignore that. It was what day are we on? We're on Tuesday, aren't we? Here we go. So I'm allowed to trade this gold setup on 2 trading days out of 12 every 3 weeks, just because I'm not able to trade New York Stock Exchange. So I just live test it or back test it every day, just to basically keep testing the strategy. And it's very simple. It's just, I mean, this was, there you go, Friday's London high that never got reached. All Friday it just dumped and dumped and dumped. So I waited for that to get tagged, which it did in Asia, but there was no breaker structure. It's literally, ideally, session sweeps, which we did get because this is Asia high, which is right next to open. So we got a full sweep, and then we also swept. Well, we swept the Friday London high within Asia already, but yeah, we swept, and then it's a 5-minute breaker structure, and then ideally we are targeting Asia lows. It's a Judas swing, so we would be targeting the low of the session, which is here, but that is such a high RR to go for. I mean, look, 1 to 8, and if it's going to hit that, it'd probably take a while. So I did it at these lows here, there, just because it was like in between, in the middle of the range. And would I have took full profit there? Probably not. It looks like we hit it there about lunchtime. But yeah, I probably wouldn't have taken full profits. I might have just trailed my stop loss along with the structure. So I would have placed my stop loss initially when we made this big movement down. I probably would have gone to break even, and then as we reacted off this fair value gap and made more moves down, I would have put my stop loss here, and then after that, if we got more down movement, I probably would have placed my stop loss. That didn't work. Somewhere around here. So we probably would have got stopped out in trailed profit. There you go, 1 to 0.5 RR. So, but yeah, I just test the strategy just to ensure it works. Just keep my head in the game on this as well. Like I said, I'm only going to trade this 2 out of 12 trading days in a 3-week period. So yeah, it's not anything significant. I just test it as soon as we get a session sweep or a prominent highs and lows swept. 5 minute breaker structure in the opposite direction, targeting the opposite session lows and highs. It's dead simple. So yeah, it looks like we're gonna get bullish structure back up on gold, ready for longs again. But anyway, I probably won't be able to trade this for another week and a half. This on an actual trading day if a setup appears, but it's not. Yeah, I just do this anyway. But yeah, let's go back to. Okay, this is exactly what I wanted to see. So I've still got 30 minutes in my trading window. I could easily, if a setup farms, I could take something. Okay, this is looking good. I mean, we didn't tap the opening price gap. I mean, it depends which one you go off. Like, so here you can actually see the gap, but this is electronic trading hours. So, look, that's from the 10 o'clock gap, but New York Stock Exchange closes at 9, so that's why I did it here. If you look, because that's the 9 o'clock candle open, so it would actually be that one. So yeah, so the actual, I mean, it's actually lower here, but we tend to, if I just tap this dead quick, this is the opening there. That's the opening actual, but which is this one. That's the actual opening. So we have hit that and pre-market lows, or we'll hit it in pre-market. But yeah, it would be nice if we did tap that. I mean, we've tapped the daily gap, but like I said, look on that. We even got a 5 minute break of structure on Nasdaq, but S&P, and this is the other thing, we were 15 minute bearish and I think 30 minute and hourly. So look at that, 1 minute break of structure to the upside on the S&P, 30 minute break of structure, 15 minute break of structure, 5 minutes still intact. So I am going to look for longs here. So we'll see what we take. And we took out some lows here as well on the S&P anyway. So yeah, 1 minute break of structure, and then fair value gap, order block, equilibrium, whatever comes to us. So we've got a fair value gap here. It would be nice if we came back down to hit that. I mean, it doesn't have to be this one. One could form here too. So maybe this will form into one. So, like I said, the stop loss is going to go underneath these lows, but that's the other thing. We need to check that we're going to get a decent risk reward from this, because, I mean, it looks like we will. Just from this. I mean, look, the next target would be at 1 to 3 RR. Isn't an ideal risk reward, but it's definitely better than no profit at all, or just no traders. Well, being out of the market is always better than being in it, but I think we have, do we have other highs as well? Do we have, there we go. These are the current all-time highs, so I can just mark that out as well, and that would be a 1 to 2 RR. So, I mean, we are reacting off a 5 minute fair value gap and 5 minute inverse fair value gap. But again, when everything's just broken structure to the upside, I am... oh, Nasdaq's coming down lower. Okay, here we go. We've tagged these lows, so my confluence has just become much stronger for longs. And same with this. I mean, I think, are we hitting inverse? Yeah, so we hit our fair value gap. And we've also hit an inverse fair value gap, which is really good. Now, hopefully we can get a positive reaction off of these. And if we do, I will enter the trade. I'm just going to get on my MetaTrader 5. So, looks like we're pushing quite strongly. We got a displacement candle down. Reacting off the 5 minute. So that 5 minute gap I mentioned before here, we're actually getting a, well, I said positive for the inverse. So there's the inverse. Look at that. The 1 minute came in, filled it perfectly, reacted back out of it, and then huge displacement down. Inversed this gap. Looks like we might inverse. Oh, sorry, we won't invert. We'll invalidate the inverse fair value gap, which is fine. We just keep waiting. We are within an order block here, so as well. But I'm not trying to like look for every excuse. I'm just if I just change that to purple or blue or something. No, I don't like blue. What can we do for an order block? Orange maybe? Yeah, orange would be fine, or yellow. Yeah, I think I prefer yellow. I don't know why I'm so bothered about the... okay, that's fine for a order block. So there we go, order block, positive reaction, though I would probably just wait for a continuation in terms of, like, we've already broken structure up, but we've had a huge displacement down, so I'm probably going to want to see like another higher low made and higher high, so basically like a continuation of the break-in structure. And if we get that, I will enter. So I'm gonna get ready on my MetaTrader 5. Let's just make sure. So 115. And then I can always add to it as well. Get rid of this for now. I mean, even that though, that's... because like I could have entered off that order block, positive reaction out of it. But like I said, just looking at the price action itself, I know I'm supposed to be quite mechanical with this, but at the same time I'm not going to be stupid and say, oh, do you know what I mean, and just excuse it. Like, look, like I said, we've had a full reaction off this inverse and 5 minute fair value gap, and then a positive for that or negative for us reaction. So I'm just going to wait until we have further confirmation, because, you know, there's no point entering a trade just because, like I said, for me this isn't the best. And that's the other thing as well. Nasdaq might want to come lower and take more lows out or whatever, fill more of this. I mean, we're actually filling within the range now. Obviously, I did count this daily fair value gap where this wick was, and that included the price opening gap. But now we've actually hit what we need to hit. Now let's have another thing we can look at. Here we go, look. There you go, we would have been stopped out of that, so that is why we don't just enter trades. Like, I know I said I'm supposed to be mechanical, which I will be, but only when I'm comfortable with price. So let's delete that for now. Can delete this order block for now, and we broke structure to the downside. So, and we got 20 minutes of our window open. If nothing happens, then it's cool. We'll just be done for the day, which is great. I don't mind doing this. I'm really enjoying the fact that I am doing this, and I can go ahead and get rid of these highs because they've already been taken out. But yeah, relative equal highs here. I mean, I think Nasdaq will have a strong push after it's reacted. So yeah, we just gotta wait really. But I'm still super bullish. It just depends whether we see a valid setup form. And that's all we can wait for really. I do prefer if I can have a fair value gap or inverse fair value gap, which will. We had the inverse here, but we didn't get the positive reaction we needed, so that's okay. And what have we got tomorrow? Do we have any like bad news tomorrow? Okay, NFP. Oh no, that's not payroll, is it? Just employment change, but it's 2 hours before market open, so, and that's Euro news, so I don't need to worry about that. I just have Euro news, just in case there's news in the morning on London session, just so I can take that into account when I do my gold setups. But yeah, looks like a $0 day today, which is fine. Oh, here we go. Non-farm employment change. So what was tomorrow? Non-farm. Oh, ADP. Honestly, I do not know the difference. They're both just non-farm employment change to me. I don't know what the ADP means, but yeah, Thursday looks like a great day to trade. Lots of volatility probably, and volume that's going to be added into the market, and then 3 o'clock news would wait for that. But tomorrow looks like a clean trading day, hopefully some good liquidity. Oh, here we go. Maybe the S&P wants to take out some of the lows from market open. I mean, we do have market open low here, so marked it out, and let's see what happens. Oh, the thing I was looking at, my bad, I was looking to see if we had any actual, so if I look here, any like fair value gaps. There's a tiny one here on the 15 minute, but like, oh, and a 15 minute inverse, but did we already, oh, we didn't get a retrace into this yet, so there you go, inverse fair value gap, which is, that's a good confluence for us to look at. And there's also a 30 minute inverse, which is within the 15 minute. Oh, and we're in a 30 minute fair value gap right now. So I'm actually really liking how this is. I mean, this is stuff I need to proactively see more and mark out. The 1 hour looks like that. So yeah, no, I actually really like this. We tapped. Okay, look, we tapped into the 15 minute inverse and the 30 minute inverse, and then we're trading within the 30 minute fair value gap. So that's the other thing. I know I have a 90 minute trading window, but I can allow myself, like, if my setup was say like farming and we were getting a breaker structure like at 58, at 57, I wouldn't just like cut and go, okay, no trade. Like, if the opportunity is there, then I will happily be open to taking it, but I'm not going to force myself and just like, oh, I'll wait till 5 o'clock, oh, I'll wait till 6 o'clock, just to preserve mental, like the mental and psychological capacity doing this, so I don't get any mental fatigue. So it's protecting my psychology. So when the opportunity is there and we happen to be like right it's not like it's a 4 o'clock cut off time and all my charts close. I'm not like gonna do that, because if I did that and I miss a trade, I'm probably gonna, do you know what I mean? You probably feel much worse about it. So just because you're trying to be so strict with your timing. No, if I had something to do, then probably would, yeah. But when I say I give myself a bit of leeway, like if my setup was forming at 5-2 and I was like, okay, we're ready to enter, I would probably give it until about 10 past 4. I'd probably give myself like that 10 minutes leeway. If we just kept going, okay, setup, oh no, let me take out more lows. If we did that, that's where I'll cut it off. So if we get a setup form here around 4 o'clock, and then like, where's my little drawing tool? So if we got like oh, setup's forming like it is now, and then it's after 4 o'clock, and then it went boo boo boo, I would not be looking for another setup. I would be leaving the charts. So that's all I have to say really. But we're about to close on the 15 minutes, so it'd be good to see where we are. Yeah, so that's there's a tiny 15-minute gap here. I don't really want to mark it out because it's just such a small gap, but it's there, so we might as well. I need to do the like my templates. I only have those at the moment. I did have another, I don't know what happened, but my account messed up, and I had all of them laid out, like all London highs, for value gaps on every time frame, so like 5 minute, 4 hour, so I knew exactly what was what. And then I got logged out, I logged back in, and it had transferred me to like my phone settings, because I have the chart on the Trading View app on my phone, and then it just did that, and I was like, oh. So I wasn't, it was a bit annoying, but it is what it is, I suppose. I don't know. So I kind of lost all that. So as the time comes and goes, like when I'm marking out stuff, if I have to mark out a 15-minute gap, I'm just gonna go, oh, 15-minute gap, I'll save it as the preset. But for now, I'm just waffling because we're still waiting for price. I mean, we did have a good positive reaction on the 15-minute. We wicked it and closed above it, but again, obviously that's not enough to just enter. On the 5-minute, because now we're trading back into this 15-minute and 30-minute inverse gap. So yeah, just waiting. So I'm gonna sit on my phone for a bit and just chill, because there's nothing to do. But oh, okay, and a decent reaction. Please tell me I've not been. Yeah, I'm fine. I thought I might have been muted this whole time. I wouldn't have been saying what I said again. But let's check gold. Did I ever do that live test? Did I do like a? I swear I did. 5-minute break of structure. Oh right, okay, yeah. Yeah, when I said ignore that, I was just testing it on the New York's. I mean, I don't really need to. I just, but that is such a long shot. And then if I aimed for like, So the Asia lows are like here, and then 1 to 4. I mean, it's possible, but given how we've just had such a strong bullish push, I would only expect maybe this fair value gap to get hit before a continuation, and then break a structure on the daily. But yeah, I'm just gonna back test that. I think I'm not gonna live test because I know I'll be too tempted to enter it, and I don't want to create that bad habit. But right now we need to focus on this because we could be getting a sell. And then yeah, I've been doing some other things, so no trade today. I'll just go over and just work on some other things. But it's super warm in the UK right now, but even though it's only like, let's have a look. I hate my chair squeak so much, by the way. What's the weather? So it's only 20 degrees, but it's like high humidity, so it's so bad. And my room gets so warm. Like, UK houses and buildings are not, like, they are not meant to keep heat out. They're meant to keep heat in, so it's just awful. Right, do you know what? I'm gonna go for another. I need to go do something, so I'm gonna go track this. On my phone, but before we do, that's the other thing as well. All of this, because it's connected to my phone now. As soon as I like do this, it'll all show up on my phone. So if I go on my phone right now, and I'm like on Trading View, right, and I go, okay, cool. So let's just say, for instance, let's just say we hit this our continuation. We're like, right, we're gonna enter a trade. If it loads, there we go. So if I just said, here we go, and I was like, trade, I tap this on my phone now. Look at that. It just loads straight up onto my phone. And then I can like do whatever I want to target. I can retarget the London highs, even though we took them out. They're a good key level. That price can still react off, but yeah, how good is that? So that'd be an insane trade. 1 to whatever 4 hour. But anyway, we're not trading on hopium. We're actually trying to trade good price action. So yeah, I'm just gonna go for 5 minutes, 10 minutes, and I'll just, well, do you know what? I'll do it on my phone. So if I'm away monitoring price and I enter, I'll be able to put it in my phone, and you guys, well, this is for more me, but I'll be able to see where I actually entered up and stuff. So yeah, I'll be back soon. So unfortunately, I don't think we're gonna see any trades. I mean, this looks like a nice movement up now, but I didn't get what I wanted. So, I mean, we've reacted so positively to these maybe not that 30-minute, but to the inverse and to this 15-minute. We've done a really good job on 5-minute breaker structure back up. I mean, it's so what I was looking for. So this is kind of making its move now. So and we haven't got the kind of what we needed. So we came up here, right? I made a mistake as well that I need to clarify and go over. So we come down here. I was waiting for the breaker structure, which we got not with this candle, on this candle here. So here, there you go. So on this next candle here, we got a breaker structure. So I was like, cool. So on my CFD chart, it's very slightly different. There was no 1 minute fair value gap here, like there is right here. So, and I'm just gonna go ahead and delete all of these because like we know we were reacting off them. It's just so it becomes a bit clearer. So what I was interested in was this here. So, and here's my mistake. So what happened was we didn't break structure here, but we inversed the gap, right? So we inversed the gap, which technically can mean a break structure, but because we were in this and it wasn't like a strong push, we then got a tap back into this inverse fair value gap and then a reaction up, and I entered, and I shouldn't have, because I should have waited for the full breaker structure up, and then like we got here, literally the candle after we came in, and then we got the reaction here, and I was waiting for then. One sec, I need to highlight my brush. So we then came down here, and then I was waiting for a reaction back up, and that would have been my entry point, right? Which we didn't get. So now what we got here was, instead we came back down, we inverse this gap. Now we got an order block here. I mean this whole thing here technically is the order block, all of that, so you'd have to wait. Like now we're coming back down into it and into this fair value gap, so I suppose you could always, I mean look, now we're just bombing, bro. This is kind of why we have our time constraints. Look, there you go, Molo's taken out. But essentially what I was doing is I was waiting for that fair value gap on this chart, inverse fair value gap, to get hit, like I said, and then a nice, oh, why is it not doing that? A nice continuation out of it. And like if we got this move before, I would have entered that. I mean look, right now that's just got absolutely, bro, that's just pushed down really, really hard. Now if I was me last week and I wasn't making this video, when I was just downstairs, I would have been looking at this chart, and as soon as I seen this breaker structure and started moving up, I would have gone shit. I would have chased price. I would have entered like freaking here, right? And then maybe I would have put my lows back here, but even then I would have targeted, and I'm like 1.8, 1.9. So what you would have seen me probably do is I probably would have gone, I would have scrambled and like done something like this to get a better No, I'm glad I stuck to my rules. I mean, so what I did is when I did enter, I entered literally around here on this candle, so like here. So I entered here, right, and my stops were here. Now it would have been a decent, and that's one. I mean, my first target might have been here at 1.9 risk reward, and then I would have just moved my stop to break even. Then there you go again, and then there you go. So that would have been a decent trade, but like I said, it was the wrong entry. So what I did was I immediately exited the trade when I realised that. So the loss was very minimal. It was like 0.1% or less or something. So it wasn't an issue. It was only on. I have 3 funded challenge. I have 1 live funded and 2 challenges. So I only entered on the brand new challenge that I just got. So you know, there was a there was no major loss. It was fine. It was a mistake, and I rectified that mistake, because if I didn't, I would have I mean, I wouldn't have actually lost the trade. I mean, look, if I was here, I would have never have lost it initially, even though I thought I would have, because it didn't come down. My stops were always below the liquidity. But even then, even when I get to like a 1 to 1 RR, I wouldn't have gone, oh, I'll exit now. I would have thought it would have been a winner. But my entry was wrong. That's the whole point. I would have entered wrong, but then I would have forgot that it was an incorrect entry. And then when it was running, I'm like, okay, well, I'm winning, so it doesn't matter. And then look, I would have got stops. So, it's a good job we got ahead of that mistake. And I think that is very majorly due to the fact I am recording this. If I wasn't, I probably would have lost this trade. So, anyway, that's it. No trades today. Yeah. I think I lost. How much did I lose? I'll have a quick look. So I lost $82 is how much I lost. $82.15. Oh, £82, sorry. I'm on a GBP account rather than a USD, because when you get payouts and stuff, they end up doing exchange rates, and on top of that, when they're already taking 20%, then you'd have to do exchange rates. So even though it might be slightly more than 70,000 on a 100k account, but then the exchange rates, it probably wouldn't be worth the hassle, I should say. I don't know. I've never really looked into it properly. Maybe I should do 100k accounts instead. But yeah, that's it. No trades. I'll just upload this as it is, however long it is. It's probably been, there you go, an hour and 42. So this will just get uploaded. Yeah, that's it. So be here tomorrow. This is like just my journal, so there's literally the only mistake was that I made the wrong entry, but I rectified that pretty instantly. So yeah, I mean, it's kind of disappointing. I mean, look, it was such good confluence though. Like, I'm happy with the price action that it gave. Like I said, I was ready to enter. Look, 1 minute breaker structure back up. After being in a downtrend, whilst we're in a 4 hour uptrend, daily uptrend. The 1 hour was downtrending, but then we got the breaker structure we needed. Same with the 30 minute downtrending, took out the lows, or at least not on this, but we made an SMT, and even though we broke structure again, 15 minute broke structure, and then on the 5 minute we were already bullish coming into market open. I think. Oh no, we broke structure up and then back down again. But yeah, but as soon as market opened, bullish sentiment was there. So yeah, like I said, I mean, we broke up structure there, as you can see. When we came down, we retraced into those 15 and 30 minute inverse fair value gaps and fair value gaps. Breaker structure on the 5 minute back up would have been great for a 1 minute entry if we reacted off this fair value gap. Obviously just not there today, which is absolutely fine. There's market has obviously been trending higher for the last week, so a deeper retrace is understandable. But could we have gone against trend? Absolutely. So if we go here, once we took out the London, whatever they're called, London highs, 1 minute breaker structure, and then a continuation of some form. So I can't see anything at the minute, I'm not gonna lie. Here we go. This would have literally been the continuation, because look, 1 minute fair value gap we got there, but you'd have to wait for this, which isn't ideal. And if you imagine, I'll stop up here. It's not the best RR. So even at the New York opening lows is only less than a 1 to 1. Okay, it's a bit better at pre-market lows, which is just about to get tapped. at 1 to 6. But yeah, definitely not worth it. And we're still not taking out these lows. I mean, Nasdaq's far gone now, but hey, I guess that's been it. We'll be back tomorrow. We've got non-farm employment change, or ADP. I should be specific on that. So yeah, news. We'll look for setups on same thing again tomorrow. So cool. I think that's it. I don't think I need to cover anything else. Do I need to? I'm trying to think what I need to do in a journal. We've gone over my entry model. I haven't felt any psychological negativity. I actually feel like I've done a lot better today. If I'm gonna journal it anyway, it's that I've felt absolutely better. I've not felt a need to trade. I've not felt like anything. Like, I haven't felt desperation to trade. I mean, I did when I was off screen for that 10 minutes, like I said, and I was ready to, and I did accidentally enter, but that was an accidental enter. I was ready to enter, but then after that, here it was this, when we started getting this leg up, I was then kind of getting a little bit FOMO, a little bit panicked, but then I remembered, I thought, recording the video, so how would that look when I upload this video? And it would look bad. So I realised that. I came to my senses, and I'm doing that wrong. Yeah, I came to my senses, and here we are. We didn't take a stupid loss. So I'll be here tomorrow, and yeah, that's about it. Right. Bye.